Some people think it's about basketball. Accountants during busy season, that's March Madness. This is the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing at Sobel & Company. These A&A episodes now qualify for nano CPE credits. If you're interested in earning CPE credits, stop now and head over to njcpa.org/nano to find out how. As a quick disclaimer, the views and statements expressed herein are my own and don't necessarily reflect those of the New Jersey Society of CPAs or Sobel & Company. So we have some interesting information this time. We're going to first start off with the FASB. Now, I know you're going to hear me say a few times about the Center for Plain English, CPEA, Center for Plain English Accounting and Auditing. It's a section of the AICPA that's subscription-based. I'm not sitting here and telling you have to subscribe to it, but I strongly recommend that you look into it. It is a very valuable piece of resource for practitioners and those in industry. As the name, it's Center for Plain English, so it provides you some guidance on how to look at the pronouncements. You should look at the pronouncements themselves, but gives you a little bit of background. So with that said, they came out with a guide recently, or some guidance on inventory issues. So since we're working on financial statements, even those in industry and those in public accounting, they came out for a guide and addressing some issues regarding inventory. What we have to think about is, there's a lot of issues going on with the supply chain, not being able to get the inventory, price increases, and then additional information. And you have to take all that into consideration now. First, do you have the actual ownership? Okay, is that actually your inventory? If the inventory is not getting out of the shipyards, if they're still stuck on the ship somewhere, is that actually your inventory? And further, let's look at the corresponding other side. Did you actually make a sale if you're the actual seller and it's stuck in the rail yard somewhere? So you have to look at the actual ownership issues. Second area is supply chain cost increases. Everybody's feeling this. There's a result of increased prices. You have to consider if you have lower of cost or net realizable value matters. So you could be bringing in this inventory and putting all this additional cost into the value of the inventory and realize the cost of your inventory on the books is higher than the selling price. You could have a lower of cost or net realizable value issue. Net realizable value, what does that mean? Well, it's defined by the guidance. Net realizable value, summarized, is selling price less cost to complete, selling costs, disposal, and transportation costs. Take that all into consideration because you may actually have a write-down for your inventory based on these increased supply chain costs if they're not going to, if they exceed your ultimate selling price. And also, the guidance, ASC 330, doesn't actually give a lot of direction towards net realizable value of raw material and WIP, work in process. It does talk a lot and gives you the concept as it relates to finished goods, but it doesn't give you a lot of guidance as to raw material and WIP, but you do have to take that into consideration. That's one of the things I like about the CPA. They kind of give you a little bit of direction towards it. Again, I'm not pushing that. Other thing is that you have to consider is overhead costs. We've seen a big increase in labor costs. Again, putting that towards the value of the inventory. Are you elevating the cost of your inventory above the ultimate selling price? But the other thing you have to consider is idle costs, idle plant time, idle labor time for work stoppages due to not having the inventory to work on. The old FAS 154 that came out a long time ago, I believe that was the number, that said if you have these idle costs, you're supposed to be considering expensing them and not putting them as cost of the inventory. So there's a lot of things to look into. I know that some of the people, the public companies, already started working on their inventories, but if you haven't, please take a step back and look at what's going into your inventory. And of course, there's disclosures that we have to look at and what could possibly should be included in the notes of the financials. And finally, as it relates to this, for those auditors out there, always think about what the potential audit impact is going to be. You're going to probably have to modify your procedures and start looking at things differently and start considering different aspects as it relates to the inventory. Okay, spent a lot of time on inventory there, so we'll jump ahead. Remember ASU 2021-10, which was the last ASU that came out. Don't tell the FASB they haven't issued anything in 22 yet. They'll give us 5 more. Anyway, came out with disclosures relating to government assistance. So if you received ERC or other government assistance, while this pronouncement is not effective, you can early adopt it. You should look into this and just remember what the proper disclosures are. Frank and I did an A&A update a little while ago, and in there we discussed BATE and PTET, pass-through entity tax accounting. And we had one slide on it, and I discussed it at one of our last episodes. And I just want to tell you, if you or your client have received BATE, New Jersey BATE, or pass-through entity tax, there is particular accounting considerations. Look for the guidance, talk to another practitioner, talk to somebody else in the industry, and find out how they're treating it. Their position may not be right. Again, the CPA came out and gave some guidance on it, and you may want to look into that. Okay, let's spend a couple more minutes on different areas. AICPA came out with a peer review alert. I'm a peer reviewer, so I get the peer review alert, and we're supposed to be reviewing them on a regular basis as being a peer reviewer. In this, they gave some guidance for engagements that fall outside of the peer review year. Now, you know, when you have a peer review done, they look at a window of the last year of when. So if your peer review ends on September 30th, they look at you're supposed to look at all engagements from October 1st, the previous year, through September 30th. And this alert gave some little nuances as to what happens if the engagement wasn't issued yet, but you know it's going to be issued after your year end. And one of the things they actually recommended was maybe delay your peer review. Now, again, I mentioned I do peer reviews, and right before we came on air, and I was talking about some peer reviews I'm dealing with. These delays in peer reviews are just killers. And the AICPA and New Jersey Society, who's an administering entity, really struggles with trying to get people to complete these. So I found it a little bit odd that they're saying that you should consider delaying the peer review, because then you start getting letters as soon as 14 days after your review is supposed to be in. So just be very careful with that, but don't overlook it. Make sure if you're in a firm that's getting peer reviewed that you talk with your peer reviewer about this. You don't want to have something bubble up later on. Lastly, for those that do broker-dealers, they gave some clarification as to that broker-dealers will not be falling under the normal peer review cycle and the AICPA coverage. So you might, if you are a firm that does broker-dealer audits of SEC-registered broker-dealers, start talking to your peer reviewer now, especially if it's going to be coming up. Okay, some other really different areas. Cybersecurity. So cybersecurity is a big thing, and like everybody, I kept hearing it. 10 seminars, talked to people about it, and we actually went through a PCOB inspection, and sure enough, the PCOB, they asked about it, and they kept asking about it. They talked to our IT person, and not only that, about our cybersecurity, they want to know how we consider the cybersecurity for a 401k audit too, not even a full company, for a 401k audit. So you have to really consider, as a company, management considerations of cybersecurity. All the different things go along with it. You could read articles, cyber insurance, everything. As part of your audits, of those that are doing audits, you should be talking with management about their cybersecurity situations. We give a lot of management comments about it because a lot of companies are not considering it to the extent that they should be. Finally, I don't do a lot of SEC work, but I do bring up a lot of SEC information because I think it's important. We do have viewers that are in industry working for public companies. And the SEC is considering overhauling the public company disclosure as it relates to cybersecurity, including breaches, et cetera, stuff like that. So there's a lot of stuff going on with cyber, and I strongly recommend that you look into what you should be considering. And lastly, Deloitte and the Center for Audit Quality, and Center for Audit Quality is another section of the AICPA, but they came out with an audit committee study. Now, some people hear audit committee and they're ready to turn off, but don't do that, because when I hear audit committees, of course I think public companies, but I also think nonprofit organizations. Okay, and you're going to hear there's a lot of good information. I think it was around a 25-page report, and they had a lot of good information in there, and I just took one tiny piece of it, and it was the top areas of focus of audit committees. Financial reporting and internal controls, including fraud risk. So for those that are in public, fraud risk is one of our big considerations. The second one, you're going to love this, cyber and privacy security. Second item on their list. Ethics and compliance, third-party risk, and enterprise risk management. So this isn't just something that relates to public companies. It's not just something that relates to nonprofits. This relates to good practice for all companies. So if you can get a copy of that guide, again, it's part of the Center for Audit Quality, which is a section of the AICPA. Try and get a copy of it or talk with somebody about it because there's a lot of good information in there. Okay, in closing, I'd like to remind you about some upcoming in-person events. On April 26th, the Bergen chapter will be holding a 4-hour ANA update in Westwood. And on April 29th, the Southwest chapter will be holding a 4-hour ANA update in Cinnaminson. And please be sure to join me and many of your fellow members, including the ANA Resource Group, who tries to have a great happy hour, and they try and get CP, but that ain't going to happen, at the NJCPA Convention and Expo on June 14th to the 17th. Register for these and other events and more at njcpa.org/events. Lastly, I recommend that you join the NJCPA Accounting and Auditing Standards Interest Group by going to njcpa.org/groups. And thank you for joining us.